Hello there today, viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for September 26, 2014. So to get started here, let's take a look at where our CME dairy components settled at the conclusion of this week's trade. The table looks a little bit different than it did here last week. There's a lot more red, and we did see some pretty big sell-offs here this week, specifically in cash cheese, with blocks finishing up the week at $2.28 even. That's down 17 cents on the week, and barrels finished the week at $2.30 even, down 13 cents on the week. Cash butter settled at $3.05 even, down just a penny on the week. October whey settled at 64.5, up 2 cents, and October non-fat dry milk settled at 147.25, up 2 cents as well. Switching over to Class 3 here, we are still holding on to some of the gains that we posted from last week, but we did pull back there as well. October milk finished the week at $24.29. That's a 41-cent loss from last week's settlement. November milk settled at $22.03, down 60 cents on the week. And that brings our 2014 average price to $22.62. That's down 12 cents on the week. So let's take a look at what we saw in cash cheese exactly here this week, and it was a pretty ugly week as far as the spot markets go. You can see that the block barrel average was up for 8 weeks in a row here, and we finally saw things turn around here this week with the block barrel average dropping 15 cents to $2.29 a pound. That's down from this week's high of about $2.44 a pound, which is about 4 cents over our prior record high from back in March at about $2.40 a pound. Now, I think it was just a matter of time until we did see a pretty big down week like this, and actually the majority of this damage was done just in Friday's session alone, where we saw barrels sell off 19 cents and blocks were down 6 cents. And that brought our block barrel average down 12.5 cents just during Friday's session. Now, we did look back on the charts there, and that is the largest one-day sell-off that the block barrel average has seen, going all the way back to November of 2012. So, again, just a massive drop here today. But considering how much cheese prices came down, Class 3 futures actually held up quite well. Seems like they did have a little bit of that priced in already, so it didn't result in a limit down day like you may have thought here. But given that our domestic cheese prices continue to hold at some of the biggest spreads we've ever seen to where world prices have gone, again, I think it was just a matter of time until we saw a correction of this nature. The question going forward, though, is are we going to continue to see this slide? Because our next major support level doesn't come in until around the $2 area. That's right around this low here. So we could see things slide as far as that if we don't see some renewed buying interest after this sharp pullback here. Now, spot butter, on the other hand, did not see much of a correction here, and it is still holding near the record high of $3.06 a pound. It was a pretty quiet week as far as butter goes. We were unable to put in any new highs here, and we actually finished the week down 1 cent. We're still holding at $3.05 a pound here again. That's just down a penny from our record high of $3.06, and we actually held at that $3.06 level the majority of the week. We just saw a little bit of selling pressure here during Friday's session, which again just pushed us down that 1 cent on the week. So butter hasn't really seen much of a pullback since it bottomed out back in August of 2013. It's been more or less kind of in a straight uptrend here, so butter is very much at risk of seeing a day, probably in the near future, I would think, similar to what we saw in cash cheese here today. So there's a lot of downside risk now, especially considering with where world butter prices are at and the spread that's there. We're going to have to see our domestic prices correct lower. Otherwise, we are definitely going to see a lot of butter imports coming in if that spread maintains itself. Now let's shift over to what we exactly saw in Class 3 futures this week. So here we have a weekly chart of our second month contract, which is still the October contract here. So you can see that things have been relatively straight up going back the past several weeks here. And you can see that this week we did post a bearish weekly reversal. We put in a new contract high for the October contract and a new record high as far as Class 3 goes of 25.30 this week. Now where we finished out, though, through the end of the week, and again, the majority of that damage done on Friday here due to the negative cash session. We did see that October contract down 41 cents on the week, and we did settle at $24.29. That's $1.01 off this week's high and the record high of $25.30. So again, if we continue to see our cash cheese price decline, if we slide again next week and perhaps the weeks following that, I think there is still time over the next couple of weeks to see this October contract pull back quite a bit here after the reversal we saw this week. Now, as far as fundamentals go, it was a pretty quiet week as far as dairy reports go, but we did get our August cold storage report out on Monday afternoon, and that showed that August cheese stocks are down 4% on a year-over-year basis from 2013. So the fact that we are still down on a year-over-year basis is definitely not surprising, but you can see that this rate of drawdown really bottomed out back in March, and we were down 9% year-over-year, and we've kind of been trimming that up as we've gone forward in time, and now we're only down 4%. So the fact that that rate of drawdown to our cheese stocks has definitely come to an end and has gone in the opposite direction here as inventories slowly begin to rebuild themselves. So if we continue on this rate on the matter of a few more months, maybe we may not even be down on a year-over-year basis anymore as inventories start to get replenished. And I think one thing that may help to replenish inventories is obviously as production begins to pick up on the cheese side of things a little bit more, but we are at risk of seeing our demand drop off, so that's going to help replenish inventories as well domestically if our exports take a hit going forward due to the massive premium that our domestic prices are holding over world prices. That is a definite risk going forward. So as far as the week ahead goes, again, not a big week as far as dairy reports, but we are going to get our next dairy export numbers on Friday afternoon. So tune into next week's video. We may have a recap of those export reports, if not the following week. Other than that, that is going to do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thank you for watching and have a great weekend.